people should invest their time and money in things that gives them energy and they get excited about.
Yeah.
Because, I mean, you only live once, and building wealth is one thing, but actually having fun is most important.
Wealth HQ, empowering you to take charge of your financial life.
Barnaby Marshall is a prominent figure in the New Zealand startup ecosystem, currently serving as a partner at Icehouse Ventures. With a diverse background that spans entrepreneurship and venture capital, Barnaby co-founded the fashion brand I Love Ugly and has invested in companies like Jasper, Tracksuit, Extraordinary, Dawn Aerospace, and many more. His journey reflects a deep passion for building successful companies and nurturing entrepreneurial talent. Barnaby, what led you to the venture investment space?
It's a good question. And I mean, as a starting point, I've always been really passionate about entrepreneurship. From a young kid trading at school, it was one of my favorite days at school was the trading days where you bring your wares or whatever you could,
Marbles,
cards, anything that you can we could make a buck on. So I was always fascinated by the idea of having fun trading, and then entrepreneurship really just called me. I love the idea of making money. I would be remiss of me not to admit that as a key motivation for me in business. But I think the thing that I find most exciting is building something kind of from scratch.
Yeah.
I mean, renovating a house is really fun in that way. You see the tangible results. You start with something that's kind of unordered and a bit scrappy, and you transform it into something that really fits the vision that's in your mind. And so I think the thing that's exciting about what I do every day in the venture world is I get to understand how a founder sees the future. And that's the key thing. What I'm inquiring about before investing in a company is how does a founder see the future, and then what resources do they need to be able to make that possible, and how can we help to make that vision a reality?
Yeah. I mean, I remember when I met you about 10 years ago, and you were coming off the back of I Love Ugly, and I had about 100 mentors all in one go in that incubator space, and I seem to remember you the most. And there was a thing that you said about having notoriety and about doing the small stuff really well, and because you had just done it yourself. And so I think it makes you a really good investor because you came right through that business investment, right from the beginning.
It definitely creates a lot more empathy. I mean, the fact that I've got a business that I run today. I've got the experience of having done I Love Ugly. Similar to you, I've bought a business recently, a more traditional family-owned business, and that all gives me a unique, as an investor, not all professional investors in the New Zealand ecosystem have that same dual role, where they're an entrepreneur and an investor, and I think that gives me a lot more empathy for the journey, and I can kind of, see it from their perspective, and also when giving advice or helping to think through a way to solve a problem, it's kind of grounded in experience.
Yeah.
It's not an armchair investor that's kind of pontificating or read it in a book. My advice doesn't come from something I read in a book, and some of it does, but most of it comes from what I've actually done.
So looking ahead to 2025, still predicted to be a tough year economically. What are you seeing as the major trends and challenges that business owners and investors should think about?
Honestly, the thing which I think was a bigger challenge, reflecting on the last several years, was the excess liquidity of 21 and 22.
Yeah.
And how that made a lot of really bad habits.
Yeah.
It made people do things that they shouldn't have done, and we're still living with the consequences of that. And whether it's, I've kind of got a pretty simple philosophy when it comes to building business. It's do the things that you need to do to achieve your goals. Full stop.
Yeah.
What I think happens when you've got too much money is you do more than that. And what that creates is complexity and actually slows down everything. The things that you should be achieving, you don't achieve because you're trying to do 6 things, not 3 things.
Yeah.
And so I think the challenge going into 2025 is not dissimilar to the challenge of any other year. It's about keeping it simple. It's about being super clear on what needs to get done and it's about staying positive. I think the other thing is, tougher economic times can create this, I don't want to call it an excuse, but it's a foreshadowing, or it's a mindset that people bring to work, which is, oh, it's actually tougher to do X and Y than it should be normally.
Yeah.
And actually, that's just something that you need to shake completely and be thinking that this is a positive year. We're going to get a whole bunch of stuff done and not worry too much about the economic cycles.
Yeah. So how do you think about balancing the risk and reward then? Putting money down on the table. You've got a lot of options for you. You've got property, you've got existing businesses, you've got startups. How do you think about spreading the money you've got around and your time?
How do I think about that? I think about leverage quite a lot, and the time where I'm at in my life, I'm probably more risk on, and I'm quite comfortable with the idea of pushing quite hard. We've got a lot of debt in our household.
It's good. Me too.
Yeah. So we're in a phase, and I think my wife and I talk about seasons quite a lot. We're kind of in the season of risk on, push things pretty hard, and try and build the total asset base.
Yeah.
And so I think about even our property and other business interests are an opportunity for us to kind of lend against to maximize the footprint.
Yeah.
So yeah, I think right now with regards to risk and reward, I'm high risk, high potential reward.
Yeah. So can you talk through some examples where it's been perceived to be high risk, but you can justify that because of the rewards?
Well, I think even just, we were talking about it just earlier, the idea of buying an established business and using your mortgage or using your property to underwrite a mortgage is something that I think lots of people would find to be pretty risky.
Well, I do find it quite interesting. You have probably unmatched deal flow as a partner at Icehouse Ventures for the startup ecosystem. You've got plenty of equity to buy in the property space.
Yeah.
But you're telling me that recently you just bought an established food manufacturing business. So that kind of, to me, indicates that you are seeing buying established businesses is a very good way to build your asset base.
Yeah, I think about it as cash flow. And the more I've pontificated on what the purpose of wealth is, like even if you go and make a huge cash windfall at some point in your life, then you've got this problem. And I experience it quite a lot with investors that you interact with. Then they're like, what do I do with all this money, and how does it work for me? And then the goal is ultimately cash flow. It's about leveraging assets to build cash flow. And that's the real kind of unlock of wealth long term, is having as much income as you can from, as fewer assets. Obviously the more efficient your assets are, the more income you get from fewer things, the better. But I think I kind of also think about having a little bit in each camp, right? I've got a lot of exposure to high potential startups in my day job, which is super exciting and what I get the most out of doing every day.
Yeah.
But then I've got established businesses and kind of more traditional interests that I can think about as like a way to build cash flow long term.
Yeah. And so you are advising at the board level on scaling businesses. What do you think are those key ingredients for the growth, especially like rapid growth? If somebody wants to run a small business, it's very different than if they want to grow a big business. What are you getting called upon to talk about most?
Oh man, honestly, the biggest advice that I think people try and run faster than they should. Like, it's a lot slow. It's so much better to grow slow and then be surprising yourself with how quickly things have gone, like beyond your expectations, than try and fill the bucket up with expense, basically, to unnaturally force growth. I've seen that so many times where trying to push growth faster than it wants to go has meant slower growth.
Yeah.
And honestly, I wrote this blog post about this idea of there's a boiling point. There's a point at which water can boil, and there's a point at which a business can be the maximum. It's the terminal velocity. It's as fast as things can possibly go. And it's actually quite a lot slower than most people think. Like, a lot of entrepreneurs are naturally, and I'm the same way, you're impatient. You want Rome to be built tomorrow.
Yeah.
Like, and it to be fully realized, the vision to be fully realized as quickly as possible. And I think a lot of people think once we raise a whole bunch of money, now the job is go and spend the money. No, it's not actually. It's to get the jobs done and with as few resources as possible. And quite often, fewer people can actually get more things done because there's less organizational complexity. Like, you go from a group of 10 people to a group of 30 people, the number of lines of communication between that, unless they're really well dialed in and you've got your management structure nailed, which almost no companies do at an early stage, it creates a whole bunch of complexity. And, especially when you hire smart people that are also impatient and they're wanting to go off and do things, and you haven't got the system really built for them to be successful, it can create chaos.
Yeah.
So, I think, in terms of scaling rapidly, I think the key is don't scale scale as quickly as you possibly can and no quicker.
Yeah.
Which is actually a lot slower than most people want it to be. And then all of a sudden the momentum starts to build, and then things will naturally, once it really starts cooking, and growth starts going, then you can add costs on quite sustainably, and it just scales itself. But yeah,
It doesn't have to be a linear growth.
it's not
chart,
linear.
right?
It's never linear.
Yeah.
I mean, that was where I was that last thought I just had was there's no linear growth path. I was talking to an entrepreneur on Friday actually about they've gone through 3 growth cycles now, and now they're expanding to a new market in North America. And you've got to kind of prepare the system to be able to deal with the new the organizational complexity and the new market opportunity to be able to then grow into it. And so the foundations all need to be set. And it's almost like every time you go through a next growth phase, you need to reset those foundations.
Yeah.
And you need to think quite intentionally about what are all the inputs I need? What are the ways in which I realize if this is not the right path? How do I close down things that we're doing because we've invalidated that as a thing that we should not, we've validated that as a thing we should not be doing?
Yeah. So that's that sunk cost fallacy, right? Is just because you've gone down a pathway, you've got to be rechecking.
Yeah.
Instead of continuing on.
Yeah.
So how do you encourage the businesses you're working with to stay innovative and to look at areas where that technology can shake things up and create those growth charts?
Well, I think that the impact of AI, it's not something that I have to do a lot of. I don't encourage that very often because I think that's where a lot of technology people that are much smarter than me are naturally thinking about how to make things efficient. The 2 big unlocks, I think, in terms of overall operational efficiency in businesses that we work in mostly in the last while is the use of AI, effective use of AI in day-to-day tasks. And then I think the effective use of outsourcing to lower to high skill but lower wage economies.
Yeah, we've got about 9 virtual team members in the Philippines, and it's made a massive difference into how we can run our business.
Totally.
Yeah.
Right. If you do that well, it can be just so impactful and so great, right? And it means you can scale resource in those markets a lot more because it's just a much bigger labor market than what we've got in New Zealand.
And in terms of applying AI into the business, I think we're probably working that probably half our team are using those tools on a daily basis, and it would be good if we can get the whole team using them on an hourly basis. That's kind of the frame of mind that we're thinking. So anybody that's aspiring to be a business investor, what do you suggest they start looking at? Is the Icehouse open to new investors, or they got to go through certain funds? I saw Simplicity's involved recently.
Yeah. So we are always open to new investors. We're always raising money. So to become the current fund that we're raising is the Growth Fund 2, which is our investment vehicle to invest in New Zealand's highest potential growth stage companies. So that's beyond the startup phase. The market's proven, the team's established, and they're going through generally market expansion. It's a portfolio of, currently it's $100 million, and it's a portfolio of about 20 companies. You've got to be a wholesale qualified investor to invest in that entity.
Yep.
But we actually are next year launching a retail fund. So that will be a minimum of $5,000 for anyone in New Zealand, irrespective of wholesale qualification, to be able to have exposure to New Zealand's brightest future of technology.
Yeah. No, it sounds really awesome, man. And certainly with somebody like you at that top level of that fund, I'll be excited to jump in behind and, enjoy the journey while I focus on my day-to-day stuff.
Yeah, and I think that's what a lot of investors have, that mindset of it's a great way to get exposure and learn about. One of the biggest value adds I think a lot of the investors get out of an experience with us is hearing the stories.
Yeah.
And just seeing the different, like the real, you're on the coal face of innovation by being an investor in that fund.
And there's networking, right? Is like being one or two steps removed gives you the ability to step in and meet people and connect. And when you do have something you want to achieve yourself, it's great to know people in that little ecosystem.
Yeah.
So tell us about New Ground Coffee. You obviously want to keep in the game as a business owner yourself. What you're doing there and what you see as the vision.
So New Ground is it's a coffee innovation hub. So we're a manufacturer of a range of different ready-to-drink coffee products. What we've really innovated on is a coffee brewing system. And so we think about making coffee for the next generation of coffee drinkers. And most of that is convenience products.
Yeah.
So we make coffee in a can for basically every established New Zealand coffee roaster that makes any product in a can.
Yeah.
That's what you buy from the gas station and it's really the competition to Red Bull and V.
Yeah.
We think of ourselves as the natural energy drinks company. We do instant coffee. That was where we started actually, and it's quite a boutique product, but we sell, our biggest customer for the instant coffee is actually in the UAE.
Oh yeah.
So we sell a lot of high-end products up to markets like UAE, Ireland, a little bit to the UK, and then we do a coffee concentrate product which is for food service. So the biggest clients potentially for that, it's actually a fledgling category at the moment for us, are caterers, bakeries, people that use it either as a coffee concentrate product for making other products or as a fast, ready-to-go product. So we've got a dispensing tap.
Yeah.
You dispense a shot of coffee, you add some milk, and then you got a flat white in like 4 seconds. So if you think about like a Eden Park, they currently can't really do coffee at scale. That's a method for doing coffee at scale. So yeah, we've got a factory that's about 1,000 square meters, about 30 staff over there. It's going through a real growth curve at the moment. There's not anyone else that can do that type of canned coffee product in ANZ. So we got most of the product goes to Australia.
Yeah.
Seen a couple of containers last week, which is nice week.
Yeah. And what's your role there? You sit on the board, or you got some day-to-day?
I've got basically it's a board role. Yeah, it's kind of an executive director role. So I do the we actually read our JDs last week, and my job is basically shareholder relations. Yeah, raise the money and then like communicate with the shareholders.
Yeah. So in terms of helping people understand the investing game in New Zealand, how do you see, for most people, the mix between high risk, high reward, moderate risk, moderate reward, and low risk, low reward? Like you're trying to, I guess, mix your investment styles to your capital base and your appetite and your age. For people that are kind of getting on the beginning of that journey, what do you think they should start researching?
I think it all depends on what your interests are and what you enjoy doing, right? I think if you really enjoy property, I mean, in simple terms, you've obviously got, I think about the big assets classes as, bonds and hard assets like gold and those type of things is very low risk, pretty low reward, but it's safe as,
Safe as gold.
Safe as gold. Then you've got listed equities, and if you've got a well-managed portfolio of listed equities, or like just an index fund, you're going to do pretty well. You're going to be right in the market. And and that's a pretty safe place to be. Obviously, you don't have leverage in either of those things, which is really where property and or buying businesses come in. Banks, annoyingly, are less likely to give you money for a business if you don't have a house to back it up.
Yeah.
So building wealth through a house as a starting point probably makes pretty good sense if you're a young person trying to, just get the first bit of equity under your belt.
Tend to agree there. Yeah.
Starting a business, I love the idea of starting a business because that's really where the true innovation in the economy comes from, right? Like that's what drives everything forward is people getting out there and taking risks and starting things for themselves. Obviously, it's pretty binary, right? It either works or it doesn't work.
Yeah.
And if it's not worked and you've sunk a huge amount of money of your own money, it can be quite costly. But that's probably the highest stakes, highest reward end of the spectrum is starting your own business.
Yeah.
And everything back from there is, yeah. But I think people should invest their time and money in things that gives them energy and they get excited about.
Yeah.
Because you only live once, and building wealth is one thing, but actually having fun is most important.
Well, when you guys started I Love Ugly, how old were you?
I bought half the company actually from a buddy. I had a much less exciting men's socks and underwears subscription business. Me and Valentin moved into a co-working space together. We were buddies from several years earlier.
Yeah.
And after about 4 months, we decided it made sense for us to be in business together. So I sold all my inventory that I had, sold that business online.
Yeah.
To the 2XLs and the brand assets to some unwitting kind of vendor buyer in the US.
Yeah.
Transferred him all the assets. It was like 10 grand. So no, I don't think he lost his shirt or anything. And he kept it going for a while. And then I invested all that money into buying half of I Love Ugly, and we just went from there. But it was a really exciting time because we went through the whole kind of phase of product market fit. Like first year, we really didn't have the right product for a customer base. Like we hadn't figured it out yet.
Yeah.
And then, actually it was all accelerated. We did everything super fast because we were trying really hard and wanted to go places.
Yeah.
By the end of year one, actually, which was 2011, we'd figured out like the model, which was having shops, having the online store, and doing affordable, simple garments with a twist. That was really the kind of formula for the product range.
Yeah.
And then the brand idea came up next year. We really refined the whole brand idea in 2012, and that was when things really started to take off.
Oh man, it's been awesome to watch you grow so far, and look forward to following along. So if people want to reach out, they find you at the Icehouse Ventures.
Yeah, if anybody wants to reach out to me directly, I suppose it's LinkedIn is probably the most easy way to find my profile.
Cool. Thanks for coming along, man. And if you guys want to ask questions of Barnaby, put them in the comments below and make sure you subscribe.
Financial freedom. Financial freedom.
Wealth HQ, empowering you to take charge of your financial life.